Welcome back, investors, to Ticker Time News. I'm Adam, and thank you for joining me for the After Hours show. And remember, the most important thing is what's on your mind. If you have a question, leave the ticker symbol and your question in the comments, and we will go over it live during the show. But we have got a bunch to talk about. A bunch of earnings came out today, this morning, after hours, and it's been a very busy day. Alphabet on its call right now, best quarter for its phone, the Pixel sales ever. So Google has seen, or Alphabet that is, has seen the best sales for its Pixel phones ever in the history of Pixel phones being out. And I'm a Pixel owner. I am on the Android team. And also says cloud revenue up 45% year over year to 5.5 billion. Backlog of 70% or more to 51 billion, most of which is Google Cloud services at 31%, Google Search 36% growth, led by strong growth in retail. Hobbies first, and leisure a second close, a close second there. Right off the bat from Google. Also, GM reported they are not going to reinstate their dividend just yet on their earnings call. But oh my goodness, it is just a constant flow of information right now. There is so much going on. Okay, let's try to break it all down in the market today. Right here on your screen, the S&P 500, you can see that the rally has stalled a bit. We had two big green candles on Friday and Monday. Now, today, Tuesday, the first day of February, it's not as a powerful gain on the S&P 500. So the stock market rebound momentum has definitely slowed down, but it has not been depleted just yet. There's still a little bit of strength there in the momentum. A large component of today's drag, I guess I would say, is on the mega cap stocks. Oh my goodness, I'm getting tongue twisted here. Live streaming, isn't it? Always have something that goes wrong. Every single live stream, I get something messed up, or there's always something. Keeping it real and, and human. But anyways, the mega cap stock. So many had big moves over the past two sessions, but today it was different. It was more like consolidation mode. Apple, Microsoft, and Amazon, all three of them are a case in point for consolidation today. Trading lower in front of Alphabet's earnings because they weren't reported yet, and Alphabet's earnings came out after the market had closed, and it is doing very, very well. They had really good earnings. Now, better than expected earnings from UPS, ticker symbol UPS, which also raised its dividend by 49%. So you've got UPS raising its dividend by 49%, and GM saying they are not going to reinstate their dividend. And then Ford's coming out saying we're going to throw another $30 billion at electric vehicles. So there's a lot happening in the market today, and not just today, but it seems like this year, and I'll talk about it in more depth coming up, but it seems like this is going to be a year of consolidation, not just in the stock market in general, but big companies buying smaller companies to create giant companies, right? I think there's going to be a lot of M&A this year, which is mergers and acquisitions from bigger companies, getting those smaller companies to expand their footprint. Exxon Mobil was another good one. XOM, it was one of our 2.5, I'll call it, top Dow stock picks this week in our Catalyst Watch video that came out on Sunday evening. Comes out every Sunday evening. It talks about the week ahead. And it is a live stream, so you can ask questions too if you want. But Exxon Mobil, I split it 50-50 with Apple for momentum for this week. I said it's got another 10% to go, and boy, oh boy, has it come close. They impressed with its cash flow generation today, and it sparked a bid in other cyclical stocks that have helped to mitigate the effects of losses among the mega cap issues. Now, stocks did extend gains today for the most part, or at least on the main indices, right? On the first trading day of February. Now, investors, well, I have to say it, they're continuing to digest the prospects of a more hawkish Fed and monetary policy, right? And it's followed up with the earnings season. Those are the two main things on everyone's mind in the market right now. The Dow Jones added more than 250 points. The S&P 500 rose 0.7%, and the Nasdaq also gained 0.7%. On the corporate front, bank shares led the gains, with Goldman Sachs up 2% and JP Morgan Chase 1.5% higher. Also, Netflix, it came out of nowhere and surged 6%. And on the data front, we've got the ISM manufacturing PMI, which pointed to a further slowdown in factory activity in January. Also, Jolt's job openings exceeded market forecasts, over 10 million. The energy sector is the best performing sector of the day, no doubt. And I'll show you the ETF that we mentioned in the Catalyst Watch video. It's doing great this week so far. Exxon played a big role in that today. But the feeding off of Exxon and the other one, Exxon, it's now up over 23% year to date. I mentioned this in the Catalyst Watch video, and one of the reasons why I was hesitant on picking it is because the RSI was high, right? The RSI to MFI, which is the relative strength index plus the money flow index, it was also high, but it wasn't at resistance yet. So looking at multiple data points, it looked cautious, but man, those earnings just took it up. The financial sector, the industrial sector, and material sectors, they also outperformed today. The remaining sectors were down or flat for the day, losing anywhere from a range of 0.1% to 1.4% today. Okay, let me just plug this one quick thing here. Knowing what the top 10 stocks are in categories like value, growth, dividend, and momentum provides investors just like you and me with the guidance needed to outperform this crazy market. So to help investors meet their goals in 2022, we've put together our top 10 value, growth, dividend, and momentum stocks list. That's 40 high quality stocks ready to choose from that are constantly updated. I have a new updated version of our momentum stocks list that's ready to go out. So click the first link in the description or the link in the live chat to become a member and get instant access to our top 10 value, growth, dividend, and momentum stocks lists, and so much more. We've done the research so you don't have to. Okay, moving on now to earnings for today. First up, we've got to talk about Exxon Mobil. Ticker symbol is XOM. Get the cursor on the right screen. There we go. XOM for Exxon Mobil. And they've got some interesting things going here. Oil and gas has been the sector on fire for 2022 so far, and I expect it to continue to perform well, just because of everything that's happening in the world right now. But look at this. First off, let's look at the relative strength down here, which is in this area underneath the volume candles on the chart. It's down here. It's a purple line down here. It has been elevated 81, 81, 83, 79, 75. I mean, it has been elevated and staying elevated. The RSI plus the MFI, which is relative strength index, plus the money flow index, also way up here it's in oversold territory. Okay, oversold territory, but that can't stop it. Exxon was up 6.4% today. Now, in the Catalyst Watch video, I said they've got another 10 from Friday's close. They have another 10% they can go before they get to resistance. And that red line up here at the top, that's where the resistance is for Exxon. Right around $82.50 a share. I think that's where resistance is, and Exxon will probably cool off a little bit once it reaches that point. But that was a 10% move from Friday's close to that red line of resistance. And the reason I chose 8250 for resistance is using historical support and resistance. I mean, this is a company that the share price has been double what it is right now in history. Right now, it's making new 52-week highs right now. So today, it made a new 52-week high at 81.51. But if we go back and I'm going to throw on here, this is the daily view. So let's look at the weekly view here, okay? And you'll get a better sense of this when I put the chart together. A weekly view. I mean, look at the highs Exxon has made in the past, going back here to this all-time high in July of 2014. It was at over $100 a share. Okay, so it still has room that it can run before it gets back to all-time highs. And right now, it's on a trajectory to this red line here on the chart. And then I think it might cool off a bit because it has been moving fast. Let's see here. This week so far, it's up 7.3%. Last week, it was 4.3. And then it was actually up just 0.5%. And then we've got another 4.3 week, and then a big 12.5% move in 1 week. And that was the opening play in January. So everybody rushed in to oil. All right, now I'm going to take this back to the daily view. Okay, there we go. Also here, I'm going to scroll down here and show you, keep on going. Year to date for Exxon. Now it's up to 32 with today's move. It is up to 32% year to date. That's incredible when you look at the S&P 500 being down year to date, the NASDAQ being down year to date, and Exxon Mobil is up 32% year to date. That's why I've been talking about them so much recently, is because it's been a big mover. And when you find momentum, you can ride that momentum up even higher, and you can make a swing trade with it. Swing trading momentum is one of the things that I like to do most in the market. Long-term investing and swing trading. I love doing those. So Exxon had a lot of momentum, but that momentum I think is getting ready to run out, and we'll probably see a little sell-off here for Exxon. But their earnings. Let's talk about these numbers. So EPS was $2.05. That beat by 11 cents, and revenue came in at, hold your pants for this one, boys and girls, $84.97 billion. And that number, it seems big. It is big. That was an 82.6% gain year over year. Year over year gain. And that beat by $390 million. Now, Exxon expects to achieve 2025 emission reduction plans 4 years ahead of schedule, which is really good news for the environment. Now, beginning in the first quarter of 2022, the company has initiated a share repurchases associated with the previously announced buyback program of up to $10 billion over the next 12 to 24 months. This is great news for anyone investing in Exxon for its dividend. Because remember, it's not just about the dividend yield, which is 4.6% for Exxon. It's also about these share repurchase programs that companies have. You have to add those two yields together to find the true yield of a company. And that's what good dividend investors look for. And that's exactly what's on our top 10 dividend stocks lists. Those share repurchase programs, the dividend yield that they pay, those two yields added together. And then there's one more special factor that goes into picking a dividend stock, and that's the stock's story. Is it growing? Does it have a good story? Is it turning its business around, pivoting to do something different, more relatable to the world we're in today? So those are the three most important things when picking a dividend stock. So that's what we put into our top 10 list. All right, I will have a video coming out shortly about Exxon, going a little bit deeper on their earnings. And so make sure you're subscribed to catch that video. All right, let's talk about another real winner when it comes to earnings, and that is Alphabet. Ticker symbol is GOOG. Oh boy, that was a phenomenal earnings call for them. I got the highlights for their call. I talked about that at the very beginning of today's live stream. But look at this. It was up 1.6% during the day. So not a big gain during the day, but in after hours, it's up 8.7%. It wants to go back over 3,000 a share, which makes it a very expensive stock when you look at it just based on share price, which has nothing to do with how profitable or how unprofitable a company is. Has nothing to do with it. But good thing for you, Google is doing a 24-1 stock split. Absolutely. Now, if we look at this 8%, here's where they were at close today. And let me just circle that on the chart here so you can see it. They were right here at the close today. Right here, this squiggly line right there. That's where they closed at today. Right now, the stock is nowhere near that. I actually have to adjust this chart down a little bit. And now I'm going to put another line in. They are right here at resistance. Right here where that red line is, that's where the share price is right now. And that's where I've got resistance for Google right now. And they've stopped right there at that line, right at $3,000. Okay. Can it cross over $3,000 and hold? Possibly. The RSI on Google after the close on Friday, we talked about this in the Callus Watcher video from Sunday evening, was really low. As a matter of fact, last Thursday, we got a buy signal for Google. And if you would have bought on Thursday of last week, when the buy signal came through right here up to where it is right now, that is a 21% move since last Thursday. 21% move since last Thursday. That is brilliant. Absolutely brilliant. And you get these buy signals like that when the RSI and the MFI both together are at the bottom, are completely oversold, and there's no momentum. That's when you swoop in and buy for a swing trade. This is a nice 20+% swing trade. Buying last Thursday, you can hold it through today, sell it tomorrow. Great swing trade. Even if you wanted to sell it before earnings came out today, you still would have had a really nice gain. What, a 12 or so percent gain? That's really nice. Nice swing trade for 12%. Holding it through earnings, though, and a new Google was going to be a more bankable earnings for us. But here's the numbers that came out for Google. On their Q4 EPS of $30.69 a share, and that beat by a whopping $3.39 a share, with revenue of $75.35 billion, and that was up 32.4% year over year, and it beat by $3.51 billion. Now, Alphabet said, like I just said a moment ago, they're going to enact a 24-1 split on their share price, okay? So you take their shares, one share, and they're going to take that one share and divide it into 20 different sections, okay? And they're doing this with the Class A, Class B, and Class C shares. So if you own one share of Google, and I believe, if I have this correct, if you're a shareholder as of July 1st, okay? If you at least have one share of Google on as of July 1st, if I'm reading this correctly, as of July 1st, on July 15th, you will then receive that one share will become 20 shares on July 15th. That's a 20-for-1 stock split. That is really cool. And that's going to make Alphabet's stock share price, at least. There it is. It's up 8.9% now. It is over $3,000. It is over my price target hit right here. There's a limit order set to sell at $3,000. Bam, just hit. It's at $3,002.90. That was our swing trade target right there, and it hit just like Exxon did too last week for our swing trade. All right, wonderful. This is getting good. Okay, Google also said that the majority of its revenue came from Google advertising, which makes sense, and that includes sales from search, YouTube ads, and Google's network ads, as they call it. Also, search advertising revenue totaled $61.2 billion, and that was up from $46.2 billion in the fourth quarter of 2020, so a year ago. So Google, great earnings, and wow. Yeah. All right, next up is AMD, Advanced Micro Devices, ticker symbol AMD. They had another blowout earnings. Really nice for AMD. Now, when we put it together here on the chart, 2.2% move during regular session. After the numbers came out for earnings, the stock is up 10.6%. Another nice move. I thought we could count on this one as well. So let's show you. Here is where the stock closed today at this purple line right here. That's where it closed at. And now it is up above its 21-day moving average. That's where the share price is now. It's not quite to our targets, which is up here above $135 a share, up to about $145 a share. That's our target right there, where we want to see the stock get into. It's at $129.25 right now. Now, their numbers came in EPS of 92 cents a share, and that beat by 16 cents on revenue of $4.83 billion, which was up another big beat, 49.1% year-over-year gain, and that beat by $310 million. So AMD, great earnings. Also, gross margin, which is a closely watched measure for the semiconductor sector, it was 50% for the quarter. Gross margin, 50% for the quarter. And that's up 5% year over year. So it was at 45% at this point last year. And it's up 2% quarter over quarter. So it's 2% higher from last quarter. That is great for AMD. Now, they claim that the reason that gross margin is up so high is because they had a broader product mix of sales for this quarter. So that helped to raise up the gross margins. Now, for Q1 22, they're expecting revenue to be about $5 billion, plus or minus, they say $100 million, which is an increase of about 45% year over year. And of course, that is driven across all businesses, that growth. Now, for the whole year, fiscal year 2022, they expect revenue to be $21.5 billion. And that is an increase of about 31% year over year. And they also attribute that to growth across its entire business. Now, 2021, it was an outstanding year for AMD with record annual revenue and profitability. So each of AMD's businesses performed extremely well, with data center revenue doubling year over year, driven by the growing adoption of AMD's EPYC processors. And they spell that EPYC, EPYC processors. And that was across the cloud and enterprise customers. AMD expects another year of significant growth in fiscal year 2022 as they ramp up their portfolio and launch their next generation of PC, gaming, and data center products. Also, remember, late last month in December, China did approve the AMD and Xilinx deal. We did a video on it back in December. The approval from China came through in January. So yeah, we did a video talking about the AMD and Xilinx deal. So if you have some time, you can go back and watch that. Obviously, just skip over the part that's talking about the deal was delayed. They delayed it, but it ended up coming through as China gave them the final approval. And that's a $35 billion acquisition for AMD. So there should be some nice synergies there, and that should work out pretty well for AMD. Now, investors seem to like these numbers from AMD, and of course the acquisition of Xilinx as well, with the stock up now, about 13% for the day, regular session and after hours. But of course, the after hours percentage will count in tomorrow's session. All right, so there's AMD, and I want to show you the semiconductor ETF. It's SMH. It's the Van Erik Semiconductor ETF. We talked about this in our Catalyst Watch video when talking about AMD and other semiconductor companies that are reporting today. It was up, let's see, about 2.25% today. So that's moving nicely. And yesterday it was up, let's see how much, 5.2%. So it's an ETF doing really well. And ETFs are a safer way to play the stock market, as you don't have to take a single stock risk, because when you buy an ETF, you're buying a basket of securities and investing in whole sectors or themes or whatever it is that you like. It's most likely out there in an ETF. Okay. And then, of course, there are ETNs, which are a little riskier. That's when you want to either bet on a really bullish market or really bearish market. You can do so using an ETN. So if you want more information about ETNs and a video on ETNs, just let me know in the comments, and I'd be happy to create one there for you. All right, let's talk about PayPal. We have to talk about it. We talk about our wins and we talk about our losses. Ticker symbol PYPL. Now, investors are not taking very kindly to PayPal in the after hours off of their earnings report. Now, earnings report, it wasn't a complete, I'm not sure what word to choose. It wasn't a winner. Let's put it that way. It definitely fell short. And let's just get into this. But the main thing I want to say before we get into the numbers for PayPal, one of the reasons the stock is down 16.7% in the after hours is because of guidance. It was a very soft, as some want to call it, or I would like to call it weak guidance. And during earnings, you have to either have good top and line numbers, which is your earnings per share and your revenue. They need to beat estimates. That's one half of earnings. The second half of earnings is guidance. And if you don't have both pieces, then the stock's not going to do well. Okay? You have to have both pieces. And PayPal had about 50-50 on the earnings, EPS, and revenue side, and a complete miss on the guidance side of the equation. So the stock's down 16.6%. It was up 2.2% during regular session, but it has fallen back down to this area of support between $145 to $150. It seems to have found an area there where it can build a base. At least that's my opinion. I thought it could build one at $200 too, just to be completely transparent. Back here where you see these purple squiggly lines back in November, I thought it could hold up there at $200, and it came close to, but just couldn't do it. And all right, here's the numbers for PayPal. EPS came in at $1.11, and that missed by a penny, and a revenue of $6.92 billion, which was a 13.1% year-over-year gain, and that did beat by $30 million. So they got half of the equation there on the EPS and revenue side, but guidance was soft. So total payment volume, or TPV, of $339.5 billion. And again, that was growing at 23%. And net revenues of $6.9 billion, and that was growing at 13%. There were 9.8 million net new active accounts, so NNAs, that were added during the quarter. Now, including the 3.2 million from the acquisition of Paydi, which was a Japanese company for buy now, pay later in that area of the world. Now, Venmo processed $60.6 billion in TPV in the quarter, which was up 29% year over year. And that compares with about $60 billion in Q3. So not a big gain there in payments there for Venmo. Now, cash flow from operations of $1.8 billion, and that rose by 31% year over year. And then free cash flow of $1.6 billion, and that was up 38% year over year. I know, a bunch of numbers, but it's best just to get through them, right? And then we can talk about what the numbers mean. Now, in fiscal year 22, here's their guidance. They expect TPV to reach $1.5 trillion, with a T, trillion dollars, and revenue to be up over $29 billion. Now, TPV is expected to grow anywhere from 19 to 22%, which is less than the 23% TPV growth that it had in fiscal year 21. Now, they also have revenue expectations or growth of 15 to 17%. PayPal also expects to add 15 million to 20 million net new active accounts this year, which is good. That is a good sign. So, the company's been beat up. The stock has been beat up. I don't believe PayPal is over. So, there's something that you have to consider here when you're thinking about, where do I invest my money? Okay. A company like PayPal, who is struggling right now, whose stock has been just pummeled over the head and beaten down like in an MMA fight, down 16.9% in after hours today. There's an opportunity cost that has to be weighed when trying to figure out where to invest. It's something not a lot of people talk about. You know, I hear or watch YouTube videos in the finance space all the time, just to hear what others are saying and what they're talking about. And I hardly ever hear opportunity costs. You know, it's buy this one, buy that one, this one's great, that one's great. If PayPal, if the stock is going to be at a loss for 12 months, that's an opportunity cost that you are losing by investing in a company where its stock's not moving up. If you are not gaining money, then you are missing out on the opportunity to be gaining money. So that's something that has to be weighed here. I'm a believer in PayPal. I have conviction in PayPal. I hold PayPal. I bought more when it dipped. And when it dipped last week, I bought more. But there has to be a point where you weigh your opportunity costs. And if it's costing you more to invest in the company because you're missing other opportunities like Exxon Mobil, if we look, let me show you this. Remember Exxon Mobil, it's up over 30% year to date. PayPal is down 6.7% year to date. And of course, if it wasn't for the decline in after hours, it would be in the green, but barely. Certainly not over 30% like Exxon Mobil. So that's an opportunity cost right there between investing in PayPal, who is now losing year to date, versus investing in, say, an Exxon, who is winning year to date. So you always have to, at some point when you're investing in a company that the stock is just beaten down, you've lowered your cost basis by buying each dip, but you have to make money. The stock market is one of the, I think it's the best way to make money. One of the best ways, because it can make money while you're sleeping. You're owning a piece of a company when you buy a share. And there's only 3 ways to build generational wealth in America: own real estate, own a company, or own stocks. That's it. There's nothing else. Now, I would link crypto in with stocks there. Maybe I should say, you know, assets or something else. But those are the only 3 ways to build generational wealth in America. So the only way to buy stocks is to be in the market and make sure to weigh opportunity cost. All right, let's hop off of PayPal. We can dive into them a little deeper later on, but I got a couple more I want to talk about. I want to bring Ford up real quick because I love EVs. I love playing the EV sector. I love investing in the EV sector. And Ford, they're expected to spend as much as $20 billion to prepare for its, quote, electrification of its company. And this is according to a report out of Bloomberg today. Now, that investment is on top of the $30 billion Ford has previously said that it will invest as part of a comprehensive electric vehicle commitment from Ford. And that money will be spent from now through 2025. So the automaker's new plan includes a rethinking of the organizational chart at the company, as well as hiring new engineers that specialize in everything from battery chemistry to artificial intelligence and electric vehicle software. Those are all important. Ford has to hire the best of the best, just like Tesla, okay? Now, Ford is considering a spin-off of a small portion of its electric vehicle business to capture some of the value that's out there from investors who are willing to bet on an electric vehicle startup, to invest in them. So they're seeing a Lucid out there or Rivian out there because Ford was an investor in Rivian, right? So when Rivian IPO'd and it had the big IPO, eventually it sold off to where it is now, but it was a big IPO at first. Ford got billions of dollars from Rivian IPOing. So Ford is seeing that appetite out there from investors wanting a piece of the electrification pie. And now Ford is willing to at least contemplate and think about spinning off a small part of their electric vehicle department in the company as an IPO for its to be a standalone, uh, call it a subsidiary, right? And General Motors did the same thing with its cruise division. So this is interesting from Ford. And I really believe that there is a race right now to second place in the EV market. Right now, Tesla is the leader. Tesla is the king, queen, whatever you want to call them. They're at the top of the food pyramid. And right now, everyone else in the EV industry is racing to be second place. That's where I see it. Now, unless something fundamentally changes at one of these companies, that's how I see the EV space right now. Tesla is number one, and there is a race to number two. And Ford is putting a lot of money into being number two. Okay, there's the EV for you. All right, Cedar Fair. We got to talk about ticker symbol FUN, FUN, for just a moment, because it's fun. And this goes to show the consolidation in the market that I see. Now, Cedar Fair, it's an amusement park, okay? It was up 13% today, 0.4% in after hours. You can see that big green candle for today, and big volume as well. But Cedar Fair, ticker symbol FUN, FUM, their shareholders are getting a thrill ride today. They are a regional amusement park operator, and they confirmed a Bloomberg report that it had received an unsolicited, that means they didn't ask for this, but someone said, here is a proposal to buy you, and it came from SeaWorld Entertainment, ticker symbol SEAS, SEAS. Now, Cedar Fair's press release did not detail the price offered, but the Bloomberg report said it was about $60 per share in cash. That would be a 21% premium from yesterday's close. Now, if you look here, the stock price is up to $56.48. Why didn't it just go all the way up to 60? Well, things can never be that perfect in a perfect world, and that gives room, in case it's not, $60 a share that SeaWorld is offering, but it is a nice premium. Now, my first thought is that a deal like this shows SeaWorld is very confident that the leisure entertainment industry is ready for a comeback, perhaps as early as this summer. Now, I've been focused more on the cruise lines like CCL, RCL, and NCLH as leisure turnaround plays, right? But theme parks, they also make a lot of sense too. In terms of synergies, right? What the two companies can do together. A lot of regional theme parks have been adding water parks to their primary amusement parks as well, which allows parents to send their older kids off to the main park and the younger kids go to the water park. So everyone is happy in the family. And I'm not sure an animal park like SeaWorld pairs perfectly with Cedar Fair's parks, with SeaWorld mostly in warmer locations given their animals that they have, and Cedar Fair having several parks that are in colder spots in the US. Now, I guess I could see some shared locations, and certainly a shared loyalty program makes a ton of sense, incentivizing guests to try the other parks out. Now, Cedar Fair's share price, it has been stagnant over the past year. I mean, look at this. It's barely risen, trading between $44 and $50 a share. So a $60 a share bid looks pretty good, right? Seems reasonable. Now, Six Flags, ticker symbol 6, SIX, is also higher on today's news. And I gotta say, I initially thought this might send Six Flags lower as Cedar Fair would become a stronger competitor, but I guess not, huh? So I think these headlines are creating a buzz that maybe Six Flags could attract a bid as well. This is really starting to look like the year of consolidation. Big companies buying smaller companies to become gigantic companies. We'll have to wait and see how it plays out, but that's what this year is turning out to be so far. All right, let's shift our attention to another one that reported recently, UPS, because it was phenomenal. Absolutely phenomenal. I mean, look at this stock price right here. Closing down here below its 200-day moving average and then shooting up over 14% to close all the way up here on the top right of the chart. Way up here. Big move up. Big move up. It was down here. Let's see, last Thursday would have been here. It was as low as $193. $193 on Thursday. And then 1, 2, 3 days later, it's at $230. That would have been a beautiful swing trade. Beautiful swing trade. So UPS, ticker symbol UPS, it shipped a sizable earnings beat for Q4 on solid revenue growth despite a backdrop of persistent supply chain headwinds. Now, the package delivery giant also guided fiscal year 22 revenues nicely higher. The results, they resemble those reported by FedEx, ticker symbol FDX, when it posted earnings in December. FedEx noted that labor availability improved considerably over the prior quarter. And FedEx also issued upbeat fiscal 22 guidance. However, despite these encouraging signals from FedEx, there were still plenty of concerns heading into UPS's Q4 report. And that's why I did not put them in the Catalyst Watch video for this week. For one, labor conditions may be improving, but other truck delivery companies are still running into trouble hiring enough workers. For example, last month, JB Hunt Transport, ticker symbol JBHT, they stated that the common denominator of all pain across its business was stemming from labor. Also, Kirby, KEX, noted last week that finding workers is getting harder and harder. In addition to lingering staffing issues, supply chain jams have also affected logistics companies. Railroad titan Union Pacific, UNP, commented in late January that while supply chain congestion may be recovering, that recovery is coming at a slow pace. So, when taking into account these challenges, UPS Q4 earnings, their results stand out even more. Adjusted EPS growth of 35% year over year to $3.59 was a standout, beating analyst expectations by the widest margin since Q1 of 2021. Revenues returned to double-digit growth, rising 11.3% year over year to $27.7 billion, also topping estimates. All three segments helped drive overall growth in Q4. The largest segment, US domestic, about 64% of Q4 revenues, was up 12.4% year over year on a 10.5% jump in revenue per piece. International revenues also grew nicely at 13.1% year over year on a 16.4% increase in revenue per piece. Rising transit costs have been discussed at many companies during this earnings season, and their impact was fully evident by UPS's Q4 performance. However, costs are rising across the board for UPS. In the quarter, total expenses expanded by 8.1% year over year, driven mainly by higher fuel costs and higher labor costs. By leveraging its pricing power, UPS was able to wipe out the impact of the higher costs. And its operating margin for the quarter widened by 270 basis points to 14.2%. Now, looking ahead, fiscal year 22 appears set to feature a return to modern growth levels. UPS experienced revenue of $102 billion, translating to growth of about 5% year over year. That figure may appear relevantly mild, but UPS was growing in the single digits, low single digits, for multiple years before the pandemic. Also, a tight labor market, elevated input costs, and other supply chain problems are expected to persist throughout the year. Now, given that context, investors seem pretty pleased with UPS's forecast. Overall, UPS steered through plenty of headwinds, delivering earnings results that exceeded expectations. The company continues to outdo its main rival, FedEx, including in the performance of their respective stocks. Over the past year, UPS's stock gained over 40% to FedEx's roughly 5% gain. That's a huge difference. That growth does not cause UPS to trade at a premium of 18 times fiscal year 22 earnings, relative to FedEx's 12 times. However, after multiple quarters of experiencing less pronounced supply chain headwinds than FedEx, UPS's premium may well be justified. UPS also raised its dividend by 49%, giving it a significantly higher dividend yield of 2.7% compared to FedEx's 1.2%. By raising its dividend by such a large degree, management is demonstrating quite a bit of confidence in its near-term outlook. So what do you think about UPS pulling off this big win? Do you think supply problems, the supply constraints that we are hearing from all kinds of different companies this earnings season, will it persist throughout this year into 2023? Or do you believe that the supply chain constraints will ease this year? And if you do believe this year, which quarter? During the second quarter, third quarter, or fourth quarter? Let me know in the comments below. All right, let's talk about what catalysts we're watching for tomorrow. We've got February 2nd, second day of trading. We've got the OPEC Plus meeting. Now, while it takes place, analysts are expecting that OPEC Plus will stick to a plan to hike production by 400,000 barrels. By 400,000 barrels a day in March. But remember, in December, OPEC Plus only achieved about 2/3 of the expected increase due to shortages. Oil prices are poised for their sixth weekly gain ahead of the meeting. This could help boost Exxon Mobil, whose stock had a nice gain after it reported earnings today. That's number one. Number two, Meta Platforms, formerly known as Facebook. Ticker symbol is still FB. Maybe we'll get an update tomorrow on when that ticker symbol is changing. But Facebook, it was up 1.8% during a regular session, 2.6% in after hours. It's up in after hours like it is because of Google, because of advertising coming back. Now, Facebook reports earnings with an estimated EPS of $3.85 a share, with revenue of $33.35 billion. Now, investors are likely to get more details about the company's progress on its Oculus virtual reality headset. Now, for the first time in the company's history, Meta Platforms will break out its, quote, Facebook Reality Labs, which focuses on consumer hardware such as its Oculus virtual reality headsets. And they're doing that into its own reporting segment. It will also release growth metrics for its, quote, family of apps unit, which includes Facebook, Instagram, Messenger, and WhatsApp. I'll also be focusing on what Mark Zuckerberg may say about building and developing the metaverse. All right, next up is Qualcomm. Ticker symbol is QCOM, QCOM. Now, with AMD reporting really good today, I think there's a good chance that Qualcomm could have a good quarter as well. And that's reflected in the fact that they're up 2.7% in after hours after being up 0.7% during a regular session. Now, when they report earnings, they have an estimated EPS of $3 a share with revenue of $10.44 billion. So watch for that one. Okay, ladies and gentlemen, we have reached the end of the destination. I went through everything I wanted to talk about today, and thank you so much for joining me. Before you go, there are 3 things I would love for you to do. Number 1, click the like button. That lets YouTube know that you found this video to be helpful, informative, actionable. Second, take the URL and share it wherever you can, on Facebook, on Twitter, on Instagram, wherever you can. That lets other people know that you found this video to be helpful, informative, actionable. And then the third thing, click the first link in the description or the link in the live chat, become a member, and get instant access to our top 10 value, our top 10 momentum, our top 10 dividend, and our top 10 growth stocks. Those lists are constantly updated. That's over 40 high quality names ready to choose from, and it helps to support our research, analysis, and technical breakdowns of, well, all the stocks that are out there that seem to be of interest to us all. All right, ladies and gentlemen, thank you so very much for joining me today. I greatly appreciate it. And remember, this show is for you. So if you have a question, if you want to talk about something other than what I am bringing up in the video, just leave the ticker symbol and the question in the comments and we'll go over it. All right, thank you so very much for joining me today. Remember, if it's a good story, has a good chart, then it's a good investment. Thank you so very much for watching, and I will see you in the next video.